What's going on, everybody? Welcome back to my YouTube channel. So I just wanted to talk about my trade that I took today on pound USD. The reason why I want to talk about this is because it's a concept that you guys could adopt for your own trading. Now, I just want to make it clear, this is not a strategy per se. This is a concept, and what I mean by that is it's an idea, something that you can use to plan your trades, or at least add a confluence to your trade. Okay, now with principles, they're not rules, they're just guidelines and ideas for you to investigate and figure out if it's something you can add to your strategy, to your approach to the markets, to see if it adds substance or whether it's not something that's going to work for you. But the reason why it's important to all strategies, period, is simply because structure is structure. Price does the same thing over and over and over again every single day. So the concept or principle that I use for this trade was a multitude of different confluences, but the lesson that I want to teach you is about the 2 candle rule. Now, what do I mean by that? Well, what I simply mean is, more often than not, and if you watched the YouTube video from yesterday, if you haven't watched it, then I'll drop a link below. Make sure you go and watch it. But the idea is this. Let's say now the trending, or the trend of the market, should I say, is to the downside. Now, price is illustrated for a very long period of time that it's failed to break structure, and all of a sudden we have a really strong bearish momentum candle. Now, with that momentum candle, that illustrates a lot of things in terms of behavior, right? If price was failing to break a level for X amount of time, price is in a downtrend, price creates a lower high formation, and then eventually you get a very strong break below that structure, is signifying momentum. Now, let's say you had one chance to take a trade and your life depended on it, and someone said to you, based on all the confluences that we've just taken a look at now, what would the next candle be? Or what would the directional bias of the next candle be? What would you say? Well, if you said bearish, the chances are, based on all the confluences added together, so that's a downtrend, a lower high formation that forms in a downtrend, that usually then creates a lower low. We then have a key level where price failed to break for a period of time. And then eventually we have a strong momentum candle indicating, or a strong bearish candle indicating momentum. What would you say? More likely bearish. And this is the 2 candle concept. Now, I'm not going to go into too much details about it because there are many ways to trade this concept, and the principles that underline this really, you can do it in different variations. You can take single candles, you can break these down into structure on lower time frames and take them as patterns, X, Y, and Z. Like, there's so much to it, but just understand this concept, right? So if we take a look at what I've just taught you here and take a look at GU, we're on a 30-minute time frame. Now remember, structure, so it doesn't matter what time frame you're on, but look at the structure. We can clearly see the market is pushing to the downside. We're taking out levels in the market where prices failed to break for a very long period of time. We're making lower low formations, and as you can clearly see here, we have levels in the market where price is failing to break above. Now, if this isn't a strong enough sign and confluence for you to identify that this is more bearish than it is bullish, then unfortunately I can't help you here. But we can see from the market open on Sunday, we saw that the structure of this market was trending down. We anticipated this market to continue pushing down into some of these key levels, and we've completely obliterated these levels and continued this momentum. Now, when looking at this, what we have to identify is the phases here. So the first thing that we've identified is the trend in the market, which is clearly down, making lower highs and lower lows. Now we've also identified an area in the market where prices made that lower high formation and failing to break above, which is this information here. The next step is to look for the market to break structural lows so that we can identify a continued or continued momentum in the market. So when we take a look at this, what can we see? Well, you might say to yourself, should we not be waiting for price to break some of these levels here to look to take a trade? Well, yeah, you're absolutely right. But what you have to understand from a structural perspective is that every candle, if you want to, can become a key level. And you might say, well, why is that? Well, the minute I draw a line here, and let's change the color of this line, and we scale down to lower time frames, look what happens. It becomes a key level in the market. And the same principle behind the two candle concept is that if the momentum shifts and your life depended on it, you then anticipate what the next candle could be. And that's a single candle. Now you might be saying, well, a single candle is not enough to be able to take a trade. Well, let's just clear that up. If I'm taking a trade and let's say the previous candle was bearish and I want to take a trade that resembles this momentum, the structure of the market, the break of a key level, etc., etc., and I want to take a trade and I'm only expecting the next candle to be bearish, then what does that mean if I take this trade and the next candle's bearish? Well, I'm always targeting a 1-to-1. I'm never targeting a 1-to-3 because I want to win that trade, or I know that I'm going to win that trade, should I say. Of course I want to win it, but my aim is always risk before reward. So if the previous candle with all the confluence added gives me a signal to get into the market because of the bearish sentiment, and I expect the next candle to continue that bearish sentiment down, at least for one candle, what does that do for my chances of my trade? Well, it allows me to enter the market with momentum, and it also allows me to do what? Go break even. At that point, I don't care where the market is going. As long as I have a 1-to-1 break even range, then I'm taking that trade. So let's say now you look at the break of this structure and you're looking for a retest, or you're taking it based on the break, or you're just using a 2-candle concept rule or principle, should I say. Let's not use the word rule, concept. Then all you're expecting is for the market to continue down to at least get that trade to break even. So let's take a look back at the 30-minute time frame, and we're looking at this orange level here. Now, what do we see? We see price finally broke close below this level. Now, if we remove this candle, and I said to you, without looking at any of these key levels, let's remove this so that it doesn't become a distraction. Let's understand the behavior of this market along with this illustration here. If the market is trending down, we have a level in the market where price has created a level, price has left that level and come back to that level and again failed to break, and then eventually we got a strong bearish candle illustrating momentum, and then we see price breaking below structure. Along with all the confluence we have, what is the next candle going to be? And your life depends on this. What is the next candle going to be? What would you prefer to take in this scenario? Well, I know what I would do. I'll use a 2-concept theory, and I personally will say I believe the next candle, based on all the confidence I built, will be bearish. Now, can you take this trade like this? And we spoke about this yesterday, so again, if you haven't watched it, go back. Can you take the trade like this? Well, absolutely. Does it give you the best risk to reward? Not at all. But is it wrong? No. But would I prefer something different? Yes. So, what do? Well, the minute I identify that the momentum has kicked in, the 2-candle concept is playing out, the structure and the confluence is lining up, guess what I'm doing? I'm scaling down. Scaling down to my lower time frames to then repeat the exact same process again. Now, I mentioned this one more time. If you haven't seen yesterday's video, go and watch it. But look here, price is failing to break above structure. We see here we have a clear trend to the upside, and we see here that price was failing to break below these levels for a period of time. We finally have a momentum shift, and we also have an area in the market where price is failing to break above. I'm following the momentum, I'm following the directional bias, I'm following how structure is building up, and I'm waiting for the momentum to kick in on this time frame. So what am I looking for? Well, I'm simply waiting for price to break this structure and come back and give me significant evidence of price closing below this level. Now, once I have price closing below this level, I go back to the same concept, which is part of the 2 candle rule, following momentum, and this is based on the 30-minute time frame in this instance. And what am I looking for on this occasion so I can get a better stop loss? I'm looking for a pattern. And what pattern am I looking for here? Well, in this instance, I'm looking for price to break an area where the market was consolidating. The momentum's already kicked in. Structure's on my side. Price failing to break above. Finally had a break close below. Never enter in a push phase market. Always wait for a pullback. Look for those wick rejections and enter the market how you want. Once price broke this structure, came back in, retested this, left the wick rejection, then what am I doing? Taking a trade. As you can clearly see here, price eventually hit take profit. Now, if we go back to the 30-minute time frame, what can you see here? The same concept. We can see that price has clearly followed the momentum off of this previous candle with all the added confluences, continued that momentum. Here, the pullback is part of a 50% retracement strategy that I did speak about yesterday, pulling back into 50% of this previous candle and then making its way back down to areas where wicks form or a key level resides. And this is the 2-candle concept. It's very, very powerful. And if you can align this with your strategy and figure out a way to make it work for you, then I can promise you, you'll be in a very, very good place with your trading. Now, this concept you can use for any strategy, for any time frame, because structure is structure, baby. And guess what? All you need to do now is go and backtest, see if it works and aligns with your strategy, see if it's something you want to adopt, and then if you get the data that backs that it does work for you, then take it to the live markets. Just remember, everything I'm teaching you now is of my own opinion. So this is not financial advice, and neither is this signals or 100% guaranteed to work. But if you want it to work, I can tell you now, you can make it work. And just go back and look at your 30-minute time frame. Take a look at your hourly time frame. Look when price creates structure that fails to break above, finally breaks below, creates momentum. What do we have after? Momentum. And continue to search this out. You can take these trades as breakouts, look for the retest patterns. You can take these trades at key levels. I prefer to wait for the momentum shift, to be honest with you. You can take these trades as double tops, double bottoms. You can take these trades all over the place in trending markets, lower highs, higher lows. But the point is, go and back test it, figure it out for yourself, dissect the markets as single candles on higher time frames, or no wait, trade this as single candles on higher time frames if you've got enough range, or dissect this on lower time frames and take pattern trades. Very, very powerful concept. Hope it works for you. Let me know below in the comments if it does and how you're getting on. And I sure hope you enjoyed this video. Short one today, but I'll be back tomorrow. And if you enjoyed it, smash that like button. Subscribe if you haven't, turn on notifications. And until next time, family, take care and trust the process.